There's one stock that is mentioned a ton on X, and it's not Tesla, Nvidia, or Palantir. This stock is 100 times smaller than any of these companies, and is solving one of the biggest problems that these companies have. This company is ZETA Global. This is a $5 billion company that is selling consumer data to the biggest companies on the planet. It sounds fishy, so let's walk through it. So the first point, ZETA already serves most of the biggest companies already. 51 out of 100 of the 100 biggest companies are already ZETA customers. That's 44% of the biggest 500 companies that use their services. So why are so many companies using them? So we're going to look into the data moat. What is ZETA actually selling? So this company, ZETA, processes trillions of consumer signals monthly that power its AI ecosystem. So these signals, they map consumer behavior and they sort of create these profiles these big companies can use to power their ads. So how is this data actually used? Well, these consented data signals, these first-party signals on their ecosystem cover actions like reading, buying, searching, and location data. So anything really used to make personalized ads. So it goes like this: more personalized data, better ads, better conversion rates, and more money made for these companies. So it's sort of gold for these companies. That's why so many want to partner with ZETA to power their ads. And this is proved by these major partnerships. ZETA has partnered with OpenAI as of early 2026, and recently, in the past few months, they announced a Palantir partnership. So with OpenAI, ZETA is powering their ads. This is on the web, this is on their app. Basically, if you're a free user, you're gonna see these personalized ads, and ZETA's behind it, right? So it's pretty notable that ZETA is powering the ads of one of the biggest AI companies, and it's been happening since early 2026. You only expect this partnership to expand. And then the CEO commented on it personally, saying that we formed many partnerships, but none more important than OpenAI. And this is from early 2026. This is even before the Palantir partnership. And that's what he's saying. So it's a big partnership. It's really significant, but it's arguably not the biggest one because we're getting into Palantir. So recently they announced a 7-year partnership and they're targeting $100 million in annual revenue. Really, really big partnership. I mean, arguably bigger than OpenAI. As Alex Karp said, which we'll get into, they're building the future of enterprise intelligence for companies. So it's directly integrated with Palantir's commercial side, which is called Foundry. And it's their biggest partnership to date. It is their biggest ever. So let's see what Alex Karp said personally, CEO of Palantir. He said they're creating the next generation of marketing, giving ZETA personally all of the advantages of AI while protecting against many of the dangers. And he said they're bringing together architecture and AI in the context of this marketing that will transform the industry. Now you have to consider, like, Palantir is a $100 billion plus company. ZETA is only $5 billion valuation. So the fact that Palantir themselves are partnering, it's really big. And I think it's really important for the thesis. So when you look at the numbers of ZETA, specifically of their earnings, they're very strong. Their latest quarter was very strong, and they grew 50% year over year to almost $400 million in revenue. And when you look at the guidance, they have 19 quarters in a row where they beat and they raised their own guidance. Net revenue retention, still strong. This is basically how many companies that are continuing to use ZETA's products. Basically, these customers that ZETA has, they're spending more every year as they get more and more benefits. And then you look at the valuation. We can see it sort of rose here late 2024. Now it's much, much lower. So we're going to dive into why, like what happened around this time where their peak fell to where it is now. So late 2024, ZETA faced a lawsuit. This was by Culper Research. They basically alleged that ZETA has consent farms. They're collecting data illegally. And it also claims that they're inflating their earnings numbers, right? It says they're using underhanded tactics to inflate its revenue. So they're basically saying that ZETA is not a legitimate company. But let's look at the response since then. So since then, ZETA has bought $100 million in stock. Fundamentals are better than ever. They have more and more partnerships, as we've covered. Their net retention rate is high. It's over 120%. And companies are still expanding their partnerships, they're still expanding their use with the ZETA platform. And then finally, how hard is this to replicate? So the data, it's not easy to get trillions of data signals and to actually own the data legally, to own it cleanly, to have a first-party data set. That is the first part. That is not easy. Second is using that data with AI to actually make real signals, and then using those signals to make their platform stronger and help these companies retain their customers, grow their customers, and spend on ads more efficiently. They report earnings tomorrow from this video's upload date, and we will see their results. We will see if they continue this streak and if they can really fulfill the promise of being the next big stock.